This question tests your understanding of value in use, VU, as a valuation method in accounting. Value in use is the present value of future cash flows expected to be derived from an asset or a cash-generating unit. It is commonly used in impairment testing under accounting standards. The key examination point is to identify the advantage of value in use compared with historical cost or other valuation methods. When evaluating the options, remember that value in use is forward-looking based on expected future economic benefits, useful for assessing whether an asset will generate sufficient future cash flows based on estimates and assumptions, making it somewhat subjective, difficult to verify directly because it relies on forecasts rather than actual transactions. Therefore, advantages of objectivity, simplicity, and verifiability are generally associated with historical cost accounting rather than value in use. A. It assists a user to assess the future prospects of the business. Correct answer. This is the main advantage of value in use. Since it is based on expected future cash flows, it provides information about the future economic benefits that assets are expected to generate. Investors and analysts can use this information to evaluate the company's future performance and prospects. B. Amounts used are objective and free from bias. Incorrect. Value in use calculations depend on management estimates of future cash flows, growth rates, and discount rates. These assumptions involve judgment and can be influenced by management bias. Therefore, the method is not fully objective. C. It is an easily understood system of valuation. Incorrect. Value in use requires forecasting cash flows and applying present value techniques, which can be complex. It is generally more difficult to understand than historical cost valuation. D. Amounts are reliable and can be verified to invoices and documents. Incorrect. Future cash flow estimates cannot be verified using invoices or historical documents because they relate to future expectations rather than past transactions. Exam tip. A useful memory aid is value in use equals future focus. Whenever you see value in use, think about its ability to provide information on future economic benefits and future business prospects. However, remember that this benefit comes at the cost of greater subjectivity and less verifiability. Correct answer. It assists a user to assess the future prospects of the business. This question tests your understanding of current value accounting and, specifically, the meaning of value in use VAU. Under current value accounting, assets are measured using values that reflect their economic worth to the business rather than their historical acquisition cost. A key concept is that an asset may be worth more to a company through its continued use than through immediate sale. Therefore, value in use focuses on the future economic benefits that the asset will generate for the entity. Students should distinguish value in use from other valuation bases. Historical cost equals original purchase price. Open market value equals amount obtainable from selling the asset in the market. Net realizable value equals selling price less selling costs. Value in use equals value derived from future use of the asset. The critical phrase to remember is present value of future cash flows. Future benefits must be discounted because money received in the future is worth less than money received today. A. Costs incurred at the time of acquisition. Incorrect. This describes historical cost accounting, which records assets at their original purchase price. It does not represent a current value measure. B. Present value of future cash flows, less costs of disposal. Correct. Value in use is based on the present value of the future cash flows expected from continuing to use the asset, together with the amount recoverable on disposal. In current value accounting questions, this is the closest and most accurate definition provided. C. Open market value of the asset. Incorrect. This refers to the asset's market value or fair value, not value in use. D. Open market value of the asset, less the present value of the future cash outflows. Incorrect. This is not a recognized definition of value in use and mixes market value with discounted cash outflows in an inappropriate way. Correct answer. B. Present value of future cash flows, less costs of disposal. Exam tip. For program exams, remember, value in use equals present value of expected future cash inflows and disposal proceeds generated from using the asset. Think, what is the asset worth to the business if it continues to use it, rather than, what could it be sold for today? This question tests your understanding of the enhancing qualitative characteristic of understandability in the conceptual framework for financial reporting. The conceptual framework states that financial information should be presented in a way that makes it understandable to users who have a reasonable knowledge of business and economic activities, and who are willing to study the information with reasonable diligence. A common misunderstanding is that financial information should be simplified so much that everyone can understand it. This is not the case. Some financial transactions are inherently complex, and excluding or oversimplifying them would reduce the usefulness and faithful representation of the information. The key principle is that accountants should present information clearly and concisely, while still including all relevant information, even if some aspects are complex. Therefore, when preparing a presentation or financial report, the accountant's responsibility is not to omit difficult issues or restrict the audience, but to ensure that information is classified, described, and presented as clearly as possible. A. In doing his presentation, he should omit any complex issues so that everybody can understand what he is saying. Incorrect. The conceptual framework does not permit omission of relevant information merely because it is complex. Complex matters should be explained, not removed. B. He should open his presentation with the advice that some of them may not understand all of it. Incorrect. While this statement may be realistic, it does not address the accountant's obligation under the conceptual framework. The focus is on improving understandability through presentation, not warning users. C. He should classify, characterize, and present the information clearly and precisely. Correct answer. This directly reflects the conceptual framework's guidance on understandability. Information should be organized, classified, and communicated clearly and concisely, so users can comprehend it as effectively as possible. D. He should deliver his presentation just to those who are financially qualified. Incorrect. Financial reports are intended for a broad range of users, not only financial experts. The accountant should communicate effectively rather than restrict the audience. Correct answer. C. He should classify, characterize, and present the information clearly and precisely. Exam tip. For conceptual framework questions, remember that understandability does not mean removing complexity. Instead, it means presenting relevant information in a clear, organized, and precise manner while retaining all necessary details.